Hello everyone, welcome to our Group 4 presentation. We are honored to introduce and analyze Hòa Phát Group joint stock company in this video assignment. We include Minh Anh, Minh Hân, Thế Nam, Ngọc Nhiệm, and Minh Thư. The main elements that need to be covered in this video record include the introductions of Hòa Phát Group, analysis the financial, consists of balance sheet and income statement. Analysis of the financial ratios consists of 5 aspects: liquidity, asset efficiency, leverage, profitability, and market value. Lastly, a brief conclusion in general. First of all, I am Hân and I will introduce the Hòa Phát Group, a joint stock company, Vietnam's leading industrial production group. The success of Hòa Phát Group is undeniable. According to the official website, hoafat.com.vn, Hòa Phát Group is currently leading and affirming its reputation for construction steel, pipe steel, and supplying Australian beef in Vietnam. Established in August 1992, Hòa Phát Group was a company dealing in construction machine and equipment. Among the top 10 largest private enterprise in Vietnam and the top 10 best profit, especially with the revenue of 105,800 billion Vietnam dong in the first 9 months of 2021, more than 25,000 employees, and total assets of 74,643 billion Vietnam dong. It has confirmed the group development and project scale. Since November 15, 2007, Hòa Phát officially has the stock code HBG on the Ho Chi Minh City Stock Exchange. According to the TradingView Stock Exchange, Hòa Phát ranked the 4th in the list of the largest companies by the market capitalizations on the Vietnamese stock market. As of the 2020, Hòa Phát has many subsidiaries owned by the majority. So here are the top 4 subsidiaries.
I will talk about the financial analysis, the balance sheet analysis. From 2018 to 2020, Hòa Phát Group ran effectively. Overall, their total assets in 2020 were multiple and a half time higher than 2018. The total assets of Hòa Phát Group somewhere in the range of 2019 and 2020. We can saw a huge increasement, which was sold by their assets and it has increased by 29%. The organization expansion in total assets continued as before from 2019 to 2020. So to be more specific, let's move to the asset structure. Overall, both the number of non-current assets and current assets had increased during the period. However, the asset structure varied during the time frame. In the beginning, the current assets only contributed 37%, which made up over half of the total assets in 2020. Even though the percentage of non-current assets increased from 32% to 43% from 2018 to 2020, its percentage increased slightly between 2018 and 2019. And let's move to the capital structure. At the same time, both the amount of the owner equities and liabilities increased from 2018 to 2020. Their capital structure also varied dramatically during the period. At first, the owner equities were 52%, and it decreased constantly to 45% in 2020. From the viewpoint, the aggregate sum of liabilities increased constantly from 37,000 billion Vietnam dong to 72.3 thousand billion Vietnam dong. So between 2018 and 2020, more specifically, their liabilities increased 19% between 2018 and 2019. Then at that point, we fly from 26.9 thousand billion Vietnam dong to around 52,000 billion Vietnam dong.
Hello everyone, my name is Nam. Thank you for introducing me, and I will present about the Hòa Phát Group company income statement analysis, or from 2018 to 2019. In terms of the total operating revenues, the company revenues slightly increased from 55.8 billion Vietnam dong to 63.6 billion Vietnam dong, which grows 1.14% between these 2 years. And as a result, the COGS is related to the total operating revenues, which moderately increased by 8,307,194,303 billion Vietnam dong within a year. And moreover, there was a dramatic increase in total expense from 29.2 billion Vietnam dong to 41.5 billion Vietnam dong. And then in the non-operating expense skyrocketed to almost 592 million Vietnam dong in 2019. And besides, the EPS share had a significant drop from 4,037 million Vietnam dong to 2,726 million Vietnam dong in 2 years. And from the 2019 to 2020, the total revenue grew dramatically from 2019 to 2020. And besides, due to a tendency to grow well, the COGS sold by the company has increased by 1.1% 36% for 2 consecutive years. And moreover, there was an upward trend. There was an upward trend in the total expense in general. The non-operating expense tended to decrease slightly from 592 million Vietnam dong to almost 590 million Vietnam dong, and however moderately improved in EPS, which rose from 2,726 million Vietnam dong to 3,846 million Vietnam dong. And moving to the next part, I will tell you about the company comparisons. Well, as you can see that Pomina Steel company had a total operating revenues up to 8 to 9 times lower than Hòa Phát company within 3 years, and the total expense increased dramatically from 512.3 million Vietnam dong to 725.5 million Vietnam dong, and the income of the COGS still declined to 2 to 3%. And finally, the company's EPS share decreased significantly to 55 million Vietnam dong, while in 2018 ownership was the highest with 1,785 million Vietnam dong, and in 2019 with 1,275 million Vietnam dong. And that is all my part.
I am Hung and I will back with the liquidity ratios. The comparison made in this analysis are presented across 5 fundamental ratios, namely liquidity, efficiency, long-term solvency, profitability, and market value. POM is the HBG direct competitors. This shows an overview of Hòa Phát effective financial performance and the comparison of the two companies from 2018 to 2020. Liquidity ratio compute the HBG indicator such as the current ratio, quick ratio, and operating the cash flow to evaluate a company capacity to satisfy debt obligations and merchant safety. These ratios are calculated using the following formula. Thereby, we have the following data of the Hòa Phát Group. And the table below are more clearly demonstrate the difference in liquidity between two direct competitors. First of all is the current ratios. HBG and POM had high current ratio in the first 2 years. However, both firms shows a decline in this indicator in 2020. While Hòa Phát can manage a current liquidity ratio over 1, particularly 1.09, Pomina current liquidity is precisely 0.94, indicating that the company may be in financial trouble. And next is the quick ratio. Both HBG and POM face a similar in their quick ratios. They slightly decreased from 2018 to 2019, from 0.49 to 0.4 for Hòa Phát and from 0.62 to 0.55 for Pomina. However, from 2019 to 2020, this indicator of both companies continued to increase to 0.59 for Hòa Phát and 0.57 for Pomina. Lastly is cash flow. In terms of this indicator, although Hòa Phát Group is a cash ratio from 0.11 to 0.26 over the 2018 to 2020, Pomina remained constant at 0.02. The two firms are identical in that all their statistics were less than 1, indicating that they cannot meet their present obligation with cash.
Thank you, Hung. I'm Minh Thư, and let's continue with the next part, efficiency ratio. So according to Corporate Finance Institute, those are the measurements which used to assess how well a business can utilize its assets and capital to generate revenue. So let's take a look at the inventory turnover rate first. This shows us how well a company manages inventory, or in other words, how quickly do the inventory is produced and sold. Below is the information I gave you. We have its calculation by taking cost of goods sold divided by inventory. So as both being the top 10 enterprises in the steel industry, as was stated by Vietnam Credit, both Hòa Phát Group and Pomina Steel's manufacturing outcomes are considered crucial to them. And from the data here, we can see that Hòa Phát Group inventory turnover rate always remained below 4. However, Pomina ended in 2020 at a rate of 4.1. That's the result after its considerable efforts to narrow it down throughout the period. From 2018 to 2020, Hòa Phát Group has reduced its rate by 8.77%, which is from 3.42 in 2018 to 3.12 in 2020. And as I have mentioned before, Permanent Steel had made a considerable effort narrowing the rate down, which is evidenced by their 24.35% of decrease. And this is 2.78 times higher than the percentage of decrease of Perfect Group. Coming up with the total sales turnover ratio, this serves to show how successfully assets are used to create sales, and its formula is also inserted below. So in this period, both companies' rate decreased, and though being a smaller enterprise, Permanent Steel's rate remained higher than Perfect Group over the period. Their gap in sales value in 3 years was 0.37, 0.31, and 0.1 respectively. However, from 2018 to 2020, Perfect Group only saw a 0.08 decrease, while Permanent Steel had to suffer from a 0.35 decrease. And this means that the sales generated for each dollar in assets of Permanent Steel was higher than that of Perfect Group. And according to Rose, as sales increase, the company requirement for new assets reduces, which increasing the sustainable growth rate. And moving on to the last part of efficiency ratio, we have receivable turnover ratio, which is a metric used to assess how well a business manages their customer accounts receivable and how quickly short-term debts are collected or settled. The formula of taking total revenues divided by receivable are right below. And from this information inserted here, we can see that Perfect Group has always maintained the rate of 4.66, 5.17, and 5.95 times larger than Permanent Steel's rate. From 2018 to 2020, Perfect Group also witnesses a decrease of 1.08 from 26.03 to 27.11. Meanwhile, Permanent Steel saw a decrease of 1.02 from 5.58 in 2018 to 4.56 in 2020.
Now I will talk about the long-term solvency ratio, which measures how well a company's cash flow can cover its long-term debts. So it's a key metric for assessing the financial health of a company and can be used to determine the likelihood that the company will default on its debt. So first, we will talk about the total debt ratio. In here, I have a chart that I have made based on the numbers I have calculated here. So although the Permanent Steel have highest ratio than Perfect Group, their trend are less stable, and Perfect Group is having an upward tendency when it's increased from 48.1% to 55% in 2020. Next, we have the debt to equity ratio, which is the show the percentage of company financing that's come from creditor and investors. And we can see that Perfect Group have an upward trend in here. However, in 2020, both companies have a delay in their growth, as Perfect Group only increased by 9.1%, while Permanent Steel dropped by 19.3%. Next, we have the equity multipliers, which is the risk indicators that measure the motion of a company assets that is financed by stockholder equity rather than by debt. So in here, both companies are depreciation by each year. However, Permanent Steel have a little increase in 2020 by 1.8%. Next, we have the time interest earned ratio. It's the measure of company ability to meet its interest obligations based on its current income. In this table, we can see very clearly that Permanent Steel had dropped dramatically to minus 0.85%, and it somehow recovered to 0.1 in 2020. And lastly, that's cash coverage ratio. Both companies have a downward trend. Both share a downward trend. However, you can see that Perfect Group has higher cash coverage ratio than Permanent Steel. Next, my friend Thư will talk about the profitability ratios.
Let's come back to me for profitability ratios. So firstly, net profit margin. This calculates the company's profits as a percentage of its revenue. So according to the information here, Huaifeng Group's net profit margin has always remained above a rate of 10%, while Pomina Steel had never been above 4%. However, in 2019, both enterprises had to suffer from a fall, and this fall even put Pomina's rate in the minus section. However, we also witnessed a recovery from both enterprises in 2020 to 14.99% of Huaifeng Group and 0.16% of Pomina Steel. Next up is the EBITDA margin, which expressed as a percentage of revenue before interest, tax, depreciation, and amortization, used to measure an organization operating profit. And during the reported period, both enterprises suffered from a loss of 3.36% and 4.30% in 2019, respectively. They later balanced back to the point of 24.77 and 6.84 in 2020, which means an increase of 1.64% for Huaifeng Group and 0.28% for Pomina Steel from 2018 to 2020. Now let's get back to Minan for her to continue.
Now, after Min2, I will now present the last two parts of profitability ratios. First, and the third one is return on assets. It measures company profits per dollars per of assets. We can see that the figure of Huaifeng Group and is much higher than Pomina Steel, which demonstrates a higher return with less investment of Huaifeng Group compared to its competitors. Lastly, we have the return on equities. It's determined by dividing net income by the values of its shareholder equity with the aim to measure a firm's financial performance. So overall, Huaifeng Group's return on equity ratios is much higher than Pomina Steel as the Huaifeng. But however, the figure for Huaifeng dropped from 23.48% in 2018 to 17.03% in 2019, but then followed by an 8.11 increase by 2020. However, Romania witnessed a similar fluctuations, but not much more drastic, as it dropped dramatically to minus 8.46% in 1920, and then rose to 0.44% in 2020. Next, we will have the market value ratios present by Nhi.
We talk about the market value ratios. Earnings per share. So earnings per share is the monetary value of earnings per outstanding share of the common stock for a company. It is a key measure of corporate profitability and commonly used to price stock. We should see the 3-year general table of two associations. For 3 consecutive years, Huaifeng Group has had a higher proportion than Pomina Steel. The amount of the Huaifeng EPS ratios were 4,000 Vietnam dong, while Pomina was lower with 1.7 thousand Vietnam dong in 2018. In the following year, Huaifeng declined by 1.3 thousand Vietnam dong, and Pomina has a dramatic fall from 1.7 thousand to minus 1.2 Vietnam dong, 1.2 thousand Vietnam dong. By 2020, Pomina went up to 55 Vietnam dong, but it still had a long distance to Huaifeng with 3.8 thousand Vietnam dong in its earnings per share. Let's move to the price divide earning ratios. The price earning ratio, also known as the PE ratio. PE or PER is the ratio of the company share price to its earning per share. The ratio is used for valuing companies and finding out whether they are overvalued or undervalued. In general, Huaifeng Group GSC steadily increased in its PE ratio from 6.65 in 2018 to 9.2 in 2020. However, Pomina Steel GSC saw a shift in its PE ratio that was much more unstable throughout the 2018 to 2019 period. The PE ratio of Pomina Steel GSC fell dramatically from 3.79 in 2018 to minus 4.71 in 2019, but it reduced significantly to 231.79 in 2020.
Okay, and now I will present about the market value ratios. And this part is about the market to book ratios. Well, as you can see that from 2018 to 2019, well, the situations were not very good for the both companies. For Huaifeng company, there was a slight decrease of 0.18%, and Pomina Steel fell sharply to minus 0.45%. But however, in 2020, the market to book ratios of the both companies have increased slightly again. Huaifeng company and the Huaifeng company followed by 0.76% increase, and Pomina Steel Company went up to 1.03%. And moving to the next one is about the enterprise value multiple. Well, as you can see that fact group enterprise value multiples tended to grow steadily, which is increased from 6.8% to 7.7% and 7.97% throughout 3 consecutive years. Besides, the Pomina Group enterprise value multiple rose sharply from 9.02% in 2018 to 31.62% in 2019. But however, in 2020, there was a dramatic drop in a half to 50.48% in 2020. And that is all my part. And Minh Hân will tell you more detail about the conclusions. Thank you for listening.
I am Hân and I will end with this conclusion. Despite the significant impact and consequence of COVID-19 pandemic on the steel market and the economy in general, Hòa Phát Group can still maintain its assets and revenue. Hòa Phát has a stable growth rate for 3 consecutive years, 2018 to 2020, compared to the Pomina Steel. The group liquidity ratio increased significantly in the first year and decreased slightly last year, mainly due to the significant drop in coal price since the pandemic outbreak. With the competitive advantages, it has helped HBG maintain ROE and ROA higher than its competitors. Moreover, HBG revenue comes with outstanding profit after tax and has maintained an impressive profit margins. In summary, it is undeniable that HBG is one of the leading steel manufacturers in the Vietnamese market. And that's all of our group presentation. Here is the reference list, and thanks for your listening.